Good morning, and great to be back on again. Shame it's in such difficult times. Time to sort of reflect, to look at what's happening. I think we expected a risk-off reaction, and we expected a bit of a rebound. You maybe don't expect it all in one day, and I think it's pretty clear that there were people surprised in the market. I think it's pretty clear that our governments maybe had a clearer read on it than many in the market. So it's a time to reflect. It's a time to look longer term. We may make some changes. I think we will look at what this means for growth, what this means for inflation. Obviously, we look at the context coming into this. There has been quite a derating, particularly in some sectors. So we'll look at what looks attractive, but we want to look at what looks attractive on a long-term view.
What was interesting, I think, from your notes was you were talking about bringing high cash levels down at this point. That seems to be the opposite of what we've heard from a lot of fund managers who've been lifting their cash levels as they become concerned about the rate hiking environment ahead. Are you still planning to pursue that goal, and why do you feel now is the right time to enter some trades?
Sure. So we've been taking cash levels up through the rotation that we'd seen in January, February. And I think we felt that a lot of that price action had been very quick. Valuations had reset. We're sub 17 times on the MSCI World, sub 19 times on the S&P. So that's not to say it's cheap, but I think we felt that particularly in some sectors, the valuation was beginning to look interesting. Underneath that, we do believe in growth. We do. When you look at the fact that growth downgrades came through, PMI downgrades came through, that was really in the teeth of Omicron, of self-isolation, of closed factories. And if you look at some of the February prints, which were much higher, 60 plus in the UK, 56 in the US, we actually see some of that confidence returning. Now, obviously, the last 2 days will give pause to that. We have a geopolitical risk that's very real. We have an inflation risk that was already in place and now steps up. So there's probably a bit of pause given what's happening in these few days. But long term, we think a lot of the price correction was very quick. Growth is actually pretty much stable, or we're very confident actually that it might get some upgrades. So we do think it's time to look very selectively, very cautiously at coming back into some of those sectors.